Welcome back, Master Students, to Strategies Week 5-1. And this is, I decided here to actually continue the mentorship program here with, let's see, I'm just getting a little bit of a notification here. I decided to continue the strategies program here to one more week, right? To elaborate a bit more on the scalping strategies, right, team? So this is they're not too long of lectures here for scalping, but they are enlightening. Okay, so with that regard, I would like to share a couple things with you guys first. I want you to think of how you are trading here if you are a beginner. If you are a beginner, right? If you're truly a beginner. The reason why I say this is because we should consider trading like step by step, right? Similarly to how, some people say, we have to start slowly, right? Don't rush into things. And that, I got to say, it's absolutely true. We should not rush into anything at all, right? So if that's actually the case here, so what do we mean by not rushing in trading? How does that translate? How do we make sure that we can start slow? Because some people may actually think that starting slow in trading could be, it could mean that it should be risk smaller. But no, in fact, that's not the case, right? It's of course it is pretty much an integral part of trading to maybe consider smaller risk. And yeah, great man, that's also true. It could be paper trading, but by starting slow in trading, it's actually by time frame. So the faster candles, right? So I would need you to actually practice your scalping. It would be immediate short-term time frame entry and exit, right? So we're talking about immediate moves, right? So that you can capitalize and siphon from the market from one period to the next period, right? Guardian, that is exactly the way you should be doing it, right? Yeah. You know what? That's interesting for you to say, Stupid Bitcoin. That's absolutely true. Okay, so for newer traders, this is the way that you would do it. Now, the logic behind you starting with your scalping strategies and developing your immediate short-term time frame entry plus take profit is simply because you when we first start walking, like an infant or a toddler, we see the struggle. We see how they try to hold on, whatever, and they try to take their first step, and that's very much like it is. It's very much like that. It's comparable to the trade. We can't risk on heavy position here. And also, if we risk on heavy position, then we're exposed to the market for a run that we may not be ready for. So if you're not someone who runs a marathon, then don't enter the market for something like a marathon. So for example, if ARCa is saying here, this is going to be a 3 to 4 day swing, potential 5 day, I can use this against my daily trades, hedge against it, right? With this long, with this swing. Well, you're talking about someone who's probably been trading a little bit longer and has the exposure and screen time behind that strategy itself, right? So that creates a little bit of deviance here. And if you feel like this is your calling to become some type of swing trader, so then let's get at it. Let's get to there, right? But we're not going to be able to do that unless we can read price action first, right? So if we can read price action first, then we would be able to expand, right? So imagine this. You were able to tell me, we have the charts up right here, right? So we can just kind of look at a couple things. So you, for example, were able to tell me, ARCa, there is apparently some type of a small trend going on here, right? And you'll kind of pop out this tool here and highlight the resistance level. So you're telling me, you know what, there is this resistance here, and it looks like we have some confluent bottoms over here, right? Everything's looking okay. So I'm thinking here that over the next 5 to 10 minutes, price action may actually support from two areas. It could support from this area here and this area here, seeing that we're just starting this trend like this, right? So if it is the case, then we're going to make a move here that could be equivalent to, from $2.39 all the way up to the potentials of around I'd say 41.10 to 241.67. And I believe that this is the area where we can enter short at least for a little bit here, for maybe a 5-minute move, and that's it. So you just were able to identify here a trend, right? You were able to identify a small or an immediate short-term time frame trend, which is absolutely fire, and that's what I want, right? I want you to be able to identify how price moves like this, because this is going to expose you to how price action happens. Right, I need you to respect the fact that we need some screen time before we can make our next move here, right? So with that respect, you know what, guys, I'm not trying to say that what you're doing is immediately wrong and you suck and whatever else. It's not like that whatsoever, okay, guys? It's not like that. I just want you to know that I have my eyes kind of peeled here for you, and I notice here that sometimes the better strategies are presented, within the immediate short-term time frame for beginners. So think about stepping like that, right? Think about taking the first step first, right? And then the second step, because the thing here is that as you get better of giving me the analysis, right, from this price to this price over 10 minutes, then you're going to start telling me, you know what, I think that price action may support from this area right here, right, in the future, right? We just broke out of this resistance area here. This was clearly a fake out, right? So we could bounce here and then continue towards an upside where we can resist from this bound right over here, right? So you're looking at price action right here, and you're like, okay, here it comes. And then you're telling me, ARCa, this over here, over the next 30 minutes to 1 hour, we're going to enter right within this area here, and we're going to take along and take profit within this zone here. So now you're giving me 5, 10, 15, 20, 25, 30, 35, 40 minutes, including these 40 minutes of price action. So now you're exercising your 1 hour and then 2 hours of price. And then you're going to exercise your 4 hours, 8 hours, and then your 12 hours daily, and then your weekly, monthly. So I want you to know how price action behaves and how erratic it is from the immediate short-term time frame first, before you start experiencing it from the larger time. The larger time is less erratic, right? So I'm talking about here conditioning and trading, or training within volatile places, okay? So this is the best way to train, guys. It's the best time to train is when you don't want to. The best way to train is where you don't want to, right? So this is the best thing that we could do for us, right? Whether we want it or not, it doesn't matter. We have to make sure to continue pushing forward, because this is what we want to do for the rest of our lives, right? This would be a really interesting time to get into the markets, right, guys? So, and specifically, because we're reaching such huge price action towards the upside, that's, just like we talked about for, the earlier strategies lectures, we talked about, well, now we know, how to identify potential macro tops, frothy tops in the market, and then that'll be able to just kind of, we'll be able to solidify everything there, and we'll be done. JD, thank you for messaging on the YouTube side. I definitely see you there, my brother. Thank you so much for that. So, take a bite, baby. Take a bite. Go ahead. So yeah, and I gotta stress these things to you guys, because it's not always that we can share knowledge like this, and it's not always that that people will respect knowledge like this, right? So remember, team, we have to be able to determine what price is going to do from the immediate short term, and then we're going to cascade onto larger time frames, okay? And that's about as that's about as clear as I can be, okay, team? So let's go ahead and learn. Let's see. I got a concept here for you, okay? There are several ways to scalp from the market. Now, when I say scalp, I truly mean taking advantage of price action from one moment to another moment. And that could lead towards a trade that's only a few seconds long. It may be 10 seconds, it may be 15 seconds, it may be 5 seconds, right? It may actually be 30, 40, 50 seconds. It could be 1 minute, 5 minutes, probably around 10 minutes tops. That's around as long as I think I would hold it for a scalp trade before it doesn't work. Scalp trades are not particularly like the setups that you're looking for, the huge, massive run towards the upside, although they can present that potential as well. Okay? What I'm saying here the strategy that we're talking about here is beside anything fundamental, right? Nothing to do with anything like that. We are talking about sheer price action here, just trading the trend, right? And trading whatever there is as a potential confirmation or potential whatever it is, guys, because here's one piece of news too. You cannot trade a full-blown bull cycle the way you trade, a consolidating market or a bear market. Those are each individual beasts that must be treated with their own respect. So while we're training or while we're observing the bull cycle, there is a completely different strategy to trade that. Because typically speaking, if you're trading within a trend, right? If you're trading within a trending market, meaning that it's trending like this, huge range to the top, huge range to the bottom, and we could actually swing those huge upsides, swing the big downsides, or also trade the downside here day in and day out, because we know that the downside is the trend before we experience this macro bottom, before we continue to the top. That's the trending market. There is a strategy for that too. Okay. Now, but what's to happen here when the price action in the broader markets just continues to the upside and continues to the upside, where you reach, critical tops, and after new highs and after new all-time highs and new all-time highs and new all-time highs, what is there historically to latch onto? It's a little bit difficult to do that because there's nothing there. There's really nothing there. It's called price discovery. Right. So, yeah, Gray Man saying stay away. Right. So, sometimes you want to sometimes, if you can't read momentum or if you can't read flow from other metrics like options, contracts, like volatility metrics telling you for continuation from the immediate short term and cascading those timeframes to larger timeframes, that if you're not able to give that bias just yet, then we would have to rely on historical price. So in this case, we would wait until we have a setup that we are familiar. Remember, we are building a system little by little, right? Yeah, I don't like trading price discovery, says Ryan. Because all we can rely on are average true range, which average true range, you guys know already that it's a different form of volatility. And we can also rely on potential geometric tops using fibs, right? We can potentially see the tops using formation theory, and formation may give us those tops as well. So there are a few things that can give us that top side, but it's not as strong as having the top side via this mathematical solution or this formation analysis, psychological solution. It's not the same as pairing it with the raw price action that happened in history, right? Because we touched here, so this is suggesting that we're going to go right around that area there, so might as well just hit it, and that often happens, right? So when we're experiencing a bull cycle like this, team, probably better for a pullback and then continuation, right, guys? It's kind of like what happened today, right? So I released a video just now here for XRP, and I'm not even sure that a lot of people were aware of what kind of happened here, right? But there was about $1.4 billion exiting the market in just about a little over an hour. So mass liquidations occurred, causing all this turbulence, right? So it's kind of like a mass deleveraging, right? So this is going to cause liquidations throughout the market. So if it causes liquidations, there's going to be a lot of people panicking. So further downside could be observed when these moments happen. And that's because people are completely uncertain. So, seeing a completely upside market like this here introduces these situations here, because there's nothing to kind of stop price action from doing that anyway, right? So that's us. We would just find these liquid zones here, and we would just slide right down them, right? As we slid right up those areas too. So it's really like that, team. Uh, let's see. Wait on it to come back to a known something. That's right. Yeah, you wait on it to come back to that known something, or comfortable for you, right? So Stupid Bitcoin is saying, would a blackjack player double down on a pair of aces and then walk away from the tables? So in this case here, I could assume, sure, that some people, if they are very, very, very deep in the money, meaning that say for example you fell all the way down to around the $2 zone here, even some brokers showed around 195 for XRP. If you were to have done that, and your position is actually being held from below like 60 cents, this is okay. You're still fine. You're not, in fact, you're probably looking for some type of dip buy, right? Because you think that the upside is going to continue. So actually, maybe so. Maybe we can consider some type of entry here. But while the markets are a little bit uncertain, we got to just make sure that we can validate current supports before continuation. Okay, so now more on the scalping strategy. Okay, team. So I gotta describe to you guys something first. Okay, team. So something that I got to describe to you is actually called liquidity, right, team? So this is something that not a lot of people speak on. Not a lot of people really try to dive into it as much as I'd like. But I think it is important for us to at least get a general understanding over what it can be, right, team? So why don't we just go ahead and pull up here? We could just pull up a brand new chart and take a look at something here. Okay, team. So let me yeah, you know what? Let's pull up a new we're gonna pull up this new thing here. Let's see. Let's see. I'm going to go ahead and show you guys something here, but I'm just going to prepare before I show you, okay, team? And this is going to be, I guess, you know what, I had the perfect example from the last time, and I think I'm just going to use that one again, although I felt like I really wanted them to show further. Okay, yeah, you know what? Yeah, we'll use that same one. Okay, there we go. So I'm gonna go ahead and have that clip ready here for you, okay, team. So now what I want to describe to you in liquidity. So let me pull up some random time frame here, and actually it may not be something from the cryptocurrencies. It may be maybe something that has been kind of consolidating or doing its thing for a bit, and it may have been. Let's see. Okay, I guess we may be able to use this situation here on Microsoft. Okay, so what we're gonna do here is mark off a small area, and we could even use this in even like a 3-minute time frame. Oh, I hate it that happens, man. That's something that they should really work on. Like, that is actually annoying. They gotta do something about that. It just like out of nowhere, it just fucking just completely adjusts to wherever it wants to go. Okay, so I believe it was right about here. Yeah. Okay, so we're gonna mark off a relatively short-term trend here, and I want to describe something to you guys in that respect. Okay, team. So let's use this box here. Just like this. stats. Okay, team. So, just like we were identifying that prior, just like what I'm sorry, how we were identifying that prior. Okay, actually, I was gonna say that prior channel that we were just doing about 5 minutes ago. It doesn't matter. Notice here, team, that this is a consolidating area from the areas of 429.60 to about 430.70. Okay, so this presents this chop zone, and price action did this before it continued towards the upside, right? So that typically happens when there is a liquidity grab, and I'm going to display that to you here. But I want you to understand the concept of liquidity first, okay? So let me just go ahead and just pause this thing real quick and get this camera to officially start, because I definitely need you guys. Very good. Okay. Okay, so liquidity. The market makers are big fans of it. Why they are big fans of it is because they can kind of allocate, or they can not allocate, they can actually observe and see as market makers, right? Because they would, where the biggest orders are kind of sitting in. So what they want is for people to psychologically gather themselves within one zone, and it's like you'll see it like a heat map. It'll be really bright there, all the people waiting to buy, kind of like what you do on a book map, right? But except on a book map, it's built around the limit orders of someone waiting to go there. In a market maker's perspective, it doesn't have to be the order itself. It could be the activity within that zone as well. Market orders too. So this is the difference between someone using a book map and someone using, a market maker. There's way more advantage in that perspective. Okay, in that respect. So if it is that we have that kind of edge as an institution, then we're going to want to favor the market to wherever that liquidity is, wherever it is, right? So we can definitely see that, you know what, there's a lot of people kind of asking for this top end here, or even higher. But we're also noticing here that in the shorter time frame, there is a group of people here there's massive activity down here, right? A lot of cancellations, a lot of whatever, right? Just it just happens, right? It happens, and it also just it seems to be red hot for us. So why don't we just go ahead and try to gather a potential sweep here, right? So this would be a liquidity sweep. Price action would essentially fail that zone here of that channel, and then it would continue towards a lower bound to a zone to where we've already touched before. So in this case here, we can see that the intraday chart came into this low right down here. So we would mark this area here as well, because we have to know what your pre-market and your day's low is. This would be your intraday low, the intraday high, right? So we have to know those things, right? And this would be the intraday high here, confluent to your prior day's high. Now, what happened before this, though? Is there anything that would favor this for us? Well, there kind of is, right? There looks like it's let's see. there's a bar right in here. I guess we can use that, right? This right in here, this shows that this entire area was highly liquid. So this would be, another zone that we would highlight, right? So in reality, we're highlighting this bottom zone here because it already happened once to this area here. And if we want to be really critical, then we would just use this bottom side because we can't think of this, right? We would just use the most obvious thing for us. So just like this here, right? We would mark off those little situations when we can just see price action, right, for the week. And from here, we would just use this section here and also consider the 50%, like I always tell you, right? So let's just go ahead and mark that area off like this here, and we have a 50% right in that area there, right? 427.87. So let's see. So people are kind of sitting within a consolidating range here, and when you're consolidating like this, guys, expect it. Okay, you're gonna have to backtest this in this time frame for whatever asset that you're trading, but you're gonna have to backtest how many times you had a false breakdown before continuation. And this wasn't necessarily false, right? This was actually something that did overshoot the target, right? So for example, here, breaking down below, this would take us to this target here. Curiously enough, the day's low, right? But it continued to the downside. Now, why would it continue to the downside, and why is it so random, right? Even though I explained to you here that this area and this area, sure, they have a 50% where it is, but it's still like to create that 50%, it took kind of an effort. I'm not going to lie. I'm not expecting you or I'm not pretending here like you should know, like you should have known what that 50% is. No, it's nothing like that. I just use creativity to my furthest reach to create a reason as to why that can go down there. But there is something that the crypto market actually coined that's very, very useful. And they not only use the liquidity because it's just like trading equities here, but they also use the word pool, a liquidity pool. So if we're talking about an area that's like this, right? And let's just kind of put this just somewhere else, somewhere remote, right? Let's think of this as the tank, right? This is the pool right here, right? So we wanna price action has been doing this. Price action has been doing this little weird thing over here where it has like its bounds that have been around this zone already, right? And then we have this like continuation to the upside, huge upside, right? Massive, 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 all the way up there. And then finally, from the biggest pinnacle in the world up there, right? Then there's going to be that potential drop, right? Then there's going to be this like huge like dive all the way back down to this zone right down here, right? So what's going to happen here is that people are thinking it's my line, bro. If it breaks my line right here, it's just we're gonna eat crap, bro. It's gonna go to Bitcoin to $5, bro, right? So that's what everybody's kind of thinking, right? Insinuating here. So it would be, in a sense, a huge drop when it comes to like further price action here without any real stops, right? So in fact, at some point we would potentially capitulate, and that capitulation could be in the form of something like this here, right? So we just kind of make a little bit of an upside here, and then bam, this thing just immediately starts to freaking knife down towards that area there. So what happens though, right? What happens is a lot of people here try to catch that knife, right? But if you have the knife falling down like this and you try to catch it like this, well, you have a risk here of getting cut, right? That's not the best thing in the world for you to kind of do here, okay? So this is not the way to do it. What I want you to do is to be able to identify this with your raw eyes. I need you to know this because you know this, not because of anything else. I need you to understand how that's done manually first, right? Because there is, sure, we have a great inventor that's creating the machine to make your knees work, but do you apply that when you're 5 years old or when you're 2 years old? Most of the time, sure. Sometimes there is the odd occasion where we would add that for a toddler or for someone else. That it's a thing that's connected to your nervous system, and it allows you to move and walk, and you can control it via your brain, right? That's all good, but we don't do that because we are able and capable of learning how to control our own minds and our own body parts, right? So we would do this organically, right? So this is what I want you to do first, right? Learn how to read price action and learn how to read how things work. So in this case here, if we are catching that downside continuation, take a bite, baby. If we are catching that downside continuation here, typically speaking, people would wait for that bottom end target where you're speculating. You know, that's a huge weekly gap right at this point here. So this is going to happen like this, bam, and we're just going to go, right? It's going to be a huge ass V-shaped recovery from that point there. Well, no, that's not the case. It's rare that it happens like this. Right. So the reason that we would be there like that is if every single body had their buy at 446.58. That is the only way that it would sink to be that well. OK, so that's, you know, the improbabilities now, right? We're talking about millions and millions of market participants. That's not going to happen. OK, so now this takes me on to this point here. So I want you to just go ahead and observe this video. And we're just going to take a look at kind of what happens here, right? As this diver does his thing. Okay, so the first thing that we can identify here is that the diver did a prep, right? So there was a process that he had to follow. And the process wasn't only to this point here. The process was already done way before this time here, right? The process was done from the moment he decided to swim in the first place. Competitively, that is, right? So he started this from way back when. So that process led him to train and get better and get better and get better before he can get to a point to where he can compete professionally, right? So there was a process that he needed to follow, and there is an absolute strategy that you would use in order to swim. So number one is just that process, to be familiar with it before you can approach this area here and then officially make it happen, professionally speaking. Okay, so let's just rewind just a little bit here, and I want you to observe this water line right here as your area of support that we're waiting for, aka this area of support right here. And let's just see if his body reacts against that line, bro. Okay, so let's see what it's like. Here we go. So the diver goes in the water, right? So now that we're observing that the diver actually went inside of the water, then we can for sure, I would say that we can for sure imagine ourselves kind of doing the same thing on a falling knife now, can't we? So if we are continuing that capitulation, it doesn't mean that we're going to bounce from this area and then bam, all the way to the top. No, this means that we would use a liquidity zone to actually dive into and create ourselves some type of support somewhere before price action starts to come up for a little bit of breath air, right? Of fresh air, and then somehow or some reason why it comes right back in. And it continues this process, right? Over and over for however long it needs to be. Before it decides that, you know what, this is good enough. Let's go ahead and take a big, deep breath. And then get this thing to launch towards the upside. Okay, so now this pool is consistent. Think of it like this, okay? where is the, here it is. Okay, now think of it like this. The diver is actually diving from one end to the next end, right? He's diving from this point here, right? And as he dives, our price action, you know, we definitely go inside of support, right? And we come right back up, just like we do in price. So as the diver continues, you're going to notice too that he actually swims all the way to the opposing side, to the opposing wall, right? So in this area here, we're actually consolidating, right? We're consolidating. So now that I have that comparison here for you, take a look at this. If it is that we're swimming from wall to wall, right? We're swimming from wall here, from wall here, and we finally need to speed up so that we can make a shift, an official shift. Then remember what divers do when they meet the opposing wall, right? They flip and they use their feet and they continue towards the opposite way. Type in A in the chat if you are familiar with that. When that happens. Okay, so that's good that you can identify that. So the diver pivots, right? And then they use that launch in order for you to go faster the other way. So there is usually a fake out. There's usually a further liquidity grab before price action continues to the upside. So when there is that liquidity grab, that is the zone that we're actually thinking of for potential entry, not within this area here. Everybody's going to think, you know what, we validated this area as support, and now we can go ahead and long it right at the bottom side and then go. But in fact, what the institutions are doing is that they're waiting for you to enter at this point, because they know that at this point, you're going to set your entry, and then right below that entry, you're going to have your stop loss. So right where that stop loss is, that's where they come and grab you and everyone else that thinks the same way, right? So now with that respect, we would then look for the next zone for us to potentially enter. So since price action was back here at once upon a time, then we would consider potential entries within this area here, not this zone here. So now speaking on that iteration here, this further explains why price action behaved the way it did right here, right? We have consolidation. The market makers are here. They're waiting, man. They're waiting, right? Because here, the market at any moment here, you guys remember what I tell you. You guys know this. When I tell you that there is a 30-minute bar, an hourly, bi-hourly, and 3-hour, those bars typically tend to decompress or revert back to their 50%. Usually when they're at about 7 to 9 minutes to their close, right? When we're talking about a 4-hour to a 6-hour to an 8-hour bar, we are talking about reversion from 15 to 20 minutes as they close, or when they close back to their 50%, right? So now when we're talking about a daily bar, so now we're talking about an hour, right? So an hour, right about an hour is when price action will tend to pivot and continue towards the other side, right? So if that is the probability here, when we pivot and return back to the other side, then what's happening during this area here? Because we have market open right here and we have market close right over here, and we're noticing that this pivot happens at my time, 11:24 a.m. So that's that 11, 12, 1, 2, that's 2:24 p.m. Eastern time. You guys know that as we're approaching what's known to be power hour, which is right here. And then right there is when price action creates the bull flag, power hour hits, and we're going towards the upside. So the reversion, right, from the 30 to 50% decompression of your daily time frame happened at 1 hour before its close. Statistics, guys. We have to practice this. Okay, so if we now know that, you know what, this consolidation range could lead towards that final hour of the day, I bet you they're going to sweep everybody here. Right, they're probably going to sweep the hell out of everyone in here. So I want to try to look for entry in this area here. This would be my first entry, right at around that 428, right? And I'm going to have, for shares traded, I'm going to have maybe around a 4% stop loss, 4 to 6%. So if I measure 4 to 6% from that area there, well, holy shit, this is only 34% there, 0.34% there. So I'm good. So I'm all good. So I'm going to go ahead and look at my hard entry right there. And in fact, if there's anything else that can help me out for a further entry, then why don't we just go ahead and take a fib inversely from this, from the chop range, right? And see what we can do. So my first entry naturally speaks right at the 2 fib. Nice. And then the second entry could, well, guess what, right? We could actually put a second entry right at about that 2 spot 618, leading to a target of 427.81. Now, if we get rid of these drawings here and take a look at price action, well, holy crap, it went to the 618. And it sprung. So this is what I mean. It's like we're going to use a whole bunch of tricks and tips and whatever else to lead to your edge, but you have to have a rules base for yourself. Okay, so if you don't have the plan, then you won't have a win. Okay, so here's what I explained to the last strategies class team. So, like in futures contracts, you have a $25,000 evaluation, right? And they're going to tell you that you can trade up to 5 contracts. Now, for every tick that you make on the futures contracts, which is let's go to that right now, right? Let me just show you, just real fast. Let's go to the I guess a 5-minute time frame. It doesn't matter, but take a look at my cursor and the price, right, where it says 60.98. Look at my next tick up. You'll notice that it's 25. The next tick up, you'll notice that it's 50. Then it's 3/4. Then it's a whole, right? So every tick in futures trading is a quarter tick. Every whole is 1 point. So that means that from 60.98 to 60.99, you are observing 1 point. From 60.98 to 60.98 1/4, that's 1/4 point. Okay, this is based on a point basis, point and tick basis, not based by dollar basis. Okay, so that's what I'm telling you here. Okay, team. So now, when you are trading one ES contract, every tick that you get to the upside is equivalent to $12.50. So when you complete 4 ticks, meaning 1 whole, you get $50 per contract. So if this thing goes from 60.98 to 60.99, well, that one contract got you $50, right? So for the 25K account, the evaluation, they let you trade up to 5 contracts, but you can't draw down more than $500 any day. So that means that if you draw down $34, it adds it. Then you draw down $100, then it's $134. Then you draw down $200. Well, that's $334 now. So if you draw down a total of $500 in one day, you're out. You have to pay again. So now, but they expect you to make over that month, $1,500, and you can be funded as soon as 5 days. So everybody's going to rush to make the 5-day mark and make $1,500 over 5 days using those metrics. And also, you can't get lucky. You can't actually, you can't enter one trade and then this thing just rocket ships to the moon and you make the $1,500 in one trade. You get disqualified because you can't make more than half of your expected value in one trade. It's ridiculous, the amount of rules that you'll face, right? Okay, so that's kind of the parameter here for you to go abide by, right? So now that we know that, so we're thinking to ourselves, let's just say that we're gonna respect the weekly rule, the 5 days, right? Let's just say that we want to make a goal of $1,500 over 5 days. So the trick here is, right, just pull up your calculator and divide that by the 5 days. So that would be $1,500 is your goal, right? This is why I'm saying set a goal. $1,500 divided by the 5 days. Well, that's telling us here that that would equal what? $300, right? So if we have $300 to make per day, that means that we're expected to make $300 of profit per day. Now, if it is that we can't draw down more than $1,500, then that also means that we can lose up to $300 per day. So, and then you could also further quantify that, right? So if you have $500 as a daily loss limit, so if you move down more than $500 in one day, you're out. It disqualifies you despite the $1,500, right? So now you know that you can't lose more than $300 per day, and you would have to make $300 per day at least, right, to meet the $1,500 mark over that week. Okay, so now what do we do as far as risk, right? This is where I want you guys to get clever. This is where I want you to start making the math for yourself, because it's equal sides here. You can't lose more than $300 per day, or else you're behind. Right now, you know that you're getting $50 per point to the upside, or $12.50 per tick using one contract, right? So what is going to be your risk here? Because if you use 5 contracts and this thing moves 1 point to the upside, well, what's 50 times 5? You know what I mean? Snow Daddy. So what would that mean? You know, the 50 times 5 in this case would mean that you would get $250 loss if it goes against you in 1 point. Now, if it goes down 2 points, that's it. You're out. $500 in one day. So it would probably be wise for you to use lesser risk, right, to try to make your gain at a slower pace, right? A more concentrated pace, or a more balanced pace. So use it like that, but you need to have a goal in order for you to become better at trading. Next thing I got to tell you. A lot of traders always worry about, take a bite, baby. A lot of traders always worry about their psychology in the trade, and they are not quite ready to worry about that. And I can tell you, of course it matters, guys. It matters. It always matters. It always matters, okay? What I'm trying to tell you here is that there are plenty of traders out there that will continuously blame the market. They will blame the hell out of the market. Even in this situation here, right? Even in this situation here where I was telling you, you know what? I'm looking to get long the asset of, where was it? This one here. Within that consolidation range, wherever that may be. Let's see. No, it wasn't this one, team. It was actually right over here. I wish I were able to display exactly where it was, man. But it's okay. It's okay. So the zone that we were talking about, right? The consolidation area that we were talking about, it was actually Microsoft, right? We were using Microsoft. My goodness, man. Somebody remind me of things here, but it's all good. I got it. No problem. And we used it on the ticker that we went to the ES on, this one here. Okay, so let's go to MSFT. There we go. All right. So let's go back to this, to the play right back here. So, you have your typical trader. Evaluating the market here and planning his or her move, and whatever else, right? So you're noticing here that you're at a consolidation range, and your typical trader is saying, I'm going to long the hell out of this bottom. We keep on touching and touching and touching and touching, and this is going to be my long entry right here. So they forget that there is usually a liquidity sweep, right? There's usually a liquidity grab from consolidation signals. And also you're forgetting the time of the day, because the daily time frame, now reverts at exactly that time that we spoke about, right? Good stuff. So you're missing a whole bunch of things here that you're gonna get stopped out, right? And likely that trader over leverages at this point here. So over leveraging at this point here, plus not knowing about the reversion and the statistics behind that, and then also not knowing about the sweep, that's you're losing your entire account, right? Or you're losing your entire position, you're losing your daily loss limit and everything else. So this is part of the building of your system that I'm talking about, okay? So what I want you to do is make sure to write down the criteria of your system until you get it tight, until you become better and better at identifying it. And if it doesn't meet your criteria, you don't play it at all. It doesn't matter. My point to you is that every move is calculated. Because if you calculate every move, then you're diminishing the probabilities of losing. Because your guess is not as good as a measured move. So if you do have a goal and you meet that goal weekly, then you can potentially obtain a net green strategy for the rest of your career if you become so willing to do it. But you need to put your head to it, right? You need to think of these things. You need to be just as good a loser as you are as a winner. A losing strategy means you're not going to hold to like zero. A losing strategy means you already had planned to lose this much, and you're going to make an adjustment based on that loss that you already knew of. So in case this happens, I'm adjusting like this. So you follow your plan. You're noticing it with a diver. He had a process to follow. You're noticing it when you wake up in the morning. You have a process to follow. You wake up, you go to the bathroom, you do your thing, and you go to the rest of your day, just like always, right? So if that's really the case, if that's really what we're observing here, team, then you know that there is always something that has to happen for something else to happen. That's your causality, right? It's your cause and effect. So if you plan and if you write your criteria down, if you write your plan, right, and focus on every single step that it is that you need, then you'll know how to take over potential scalp trades. So, how many times have you heard this? I just told you guys that my potential entry was not here. I'm probably looking at entry down here, right? Based on your day's low. This is your intraday low, right? So naturally speaking, right, there is a probability of doing that there, right? So, hold on, guys. Hold on. Hold on just a second, team. Apologies, guys. I'm back. Okay, what I was going to say is, how many times have you heard this, right? you say to yourself, okay, I got in here, right? And we're gonna move to the upside. We're gonna do this. We're gonna rocket ship. It's gonna do it here at any moment, right? And then and you're respecting your process, right? And the price action dips. It goes to extraordinary lows and it stops you out at the point where you thought it was gonna not stop you out at. And then price action rips to the upside right after that. How many times have you heard somebody say, of course, it has to rip right after I get stopped out? Let me know in the chat. So, and that's something that like we feel is like ourselves, you know? Or then how about this? The market was crap today. It sucked today. The market just is not trading. The market's not trading well today. So that's oftentimes when we don't have a process like that we follow, you know, we often will blame anything else, literally anything else but ourselves. So the faster that we can start acknowledging that our edge is being slightly diminished because maybe there's a lack of adjustment to the system or a lack of the system, you know, then maybe we can start diminishing that wording. We have to get that out of our psychology, because it's not to say that the markets aren't, the markets are, there's no such thing as the markets are not manipulated. Of course they're manipulated. But that's our point here. It's for us to learn how to play within that manipulation, within that, within all that crap, guys, because that's just how it is. You know, if it is that, I mean, we learn how to work around policemen every day, you know. So only because there's cops around, that doesn't mean that we're not going to drive or be out, you know. So we have to, yeah, you know, we have to learn their game. And is there always a liquidity grab? No, because nothing is consistent or guaranteed in the markets. Never. Right? Nothing is guaranteed in the markets. So that tells us, that since that's it, then we would have to now backtest Microsoft in a 10-minute time frame consolidation zones with liquidity grabs. How many times do they happen and how many times do they meet the upside? Do you want to get deeper within that analysis? How much was that upside? And how long did it take? Is it usually within the power hour? Guys, the professional traders that I know and talk to have weeks of data written by hand, because they'll know the stock that they'll always catalog it in case in the future they come back to trade it. But they won't just have it as this stock typically does that. Most of the traders that I know have it as this stock typically retraces 35% when that criteria happens. So they'll already know that they have cataloged a statistic behind it. Guys, this is not really a question that I ask, but how rich do you want to get? You know, how baller do you want to be in the trading world? Well, if you want to be that baller, then you have to start worrying about yourself and the way that you observe things, right? So, for example, an athlete will train day in and day out, right? I'm talking about a professional athlete like NFL, right? NBA. We're talking about pros here. They go through rigorous training in order for them to get the big bucks. Do you want those big bucks or no? You know, so this would be the question that you have to ask yourself. And if it is that you want that kind of return from the markets, well, you also have to give that kind of time to the markets too. You can't simply give up. In the worst of times is right when you have to use it to redirect energy. In the most discouraging times, in the times where you just can't take it anymore, that is the perfect time to train harder. Because we have to be comfortable within the suck of it all. And if we can't do that, guys, then there's a problem here. But we have to make sure that we are capable of literally living, coexisting within the negative pressures. We must do that, because then when those negative pressures aren't there and you just have regular pressures, it's going to be cake. You've already conditioned all through that. I know that what I'm talking about here is a little bit of a marine, a little bit of marine or military-esque type of thing, but it's practiced because it's effective. Anybody military in here knows what I'm talking about. We're talking about precision. You're training within exact parameters always. And if they're slightly off, then you get reprimanded for that, So if we can have ourselves be that disciplined and treat this as the business that it really is, then we could have a higher probability output and inflow. So this is just the beginning of scalp trading, guys. Okay? I'm going to go ahead and extend this another week, and we're going to get into the execution of the scalp trading. And that's going to be for Saturday coming up, guys. So if you haven't already done so, guys, please, I really want you to and look at what we just did right now, prepping the execution for a scalp trade. You just noticed that it took all this time to get that done. To get one execution for a scalp trade that is likely going to last for just a few minutes long. You know what I mean? So if that's really what we're doing here, then holy crap, man. What is it going to be like when we really dive in? Well, that's why it's like 12 weeks long of executions, guys, because we're going to go through that. We're going to go through that, and and then your psychology mentorship, man, you have no clue. You guys think that that's the one I don't need. That's the one that you mostly need, team, because this is not psychology. For the psychology mentorship, I decided to name it psychology because I was afraid to scare people away from the actual title of it. The actual title of it is conditioning. So it's pressure applied. I'm going to condition you under specific things, specific pressures, to become a better trader. So these all of that, team, is needed here. It can't just be one that leads on to another, and you probably miss like 8 or 6 of the lessons, and then you come back in whenever. It's not like that. I've taken a great deal of time, team, putting this together here, so that I can make sure that I can build athletes and build stars out of this. Because I know that you guys, I know that there's one embedded here. It already probably exists. I just want people who are better than me forever, man, forever and ever. And I want you guys to be able to provide for your families. There you go. Snow Daddy asking for something pretty cool. Thank you, brother. A swing trading class would be outstanding. We did do some of that in here. It was like, I think maybe 5 weeks long. But no, we can't future swing. You can't hold anything overnight, over the hourly closure. But yeah, team. So, guys, please remember, right, to sign up. We're gonna we're gonna go towards our last week on this Saturday, and then the following Saturday will be the final examination for strategies. Okay, team. So that's coming here to a completion, and executions is going to start here pretty soon, and the beginners are going to start here pretty soon. So make sure to sign up to strategies, which is this here, and then also sign up to your executions class at the same email, ARCmasterscourse@gmail. Okay, guys, I need you guys in there as soon as possible so that we can make sure that we can have a smooth first day, right? Because every single first day of every man, it's always me playing catch up. I need to find you guys. But I love you all very much, team. And now the lecture is officially over. So please, scalp. Yeah, that's right. I got you right. So please go ahead and present here any questions you may have for me, team. And we're good to go. This is officially over. So now Green Man is saying there's absolutely nothing for me to say. This class for me is like when you know you did wrong and you also knew what was going to happen if you did that wrong. And now And now you have your parent reaffirming that you did wrong. Legit. But I always blame myself and never the markets. No one made me risk my cash. I appreciate the ass chapping, sir. It was much needed. Says Gray, man. I was not talking directly to anyone, dude. I know that somebody was gonna say that too, buddy. Just know, guys, that I am not clapping anybody individually. This is just the way it is. Guys, it responds so much to you like that because that's all of us, man. It's all of us. Always, man. It doesn't mean like. Just because you have like 18 years of experience, that does not mean at all, bro. That does not mean that you are going to be impervious to what I just talked about, man. Oh, good times indeed, good sir. Oh my goodness, dude. I absolutely love it, man. Oh man. Yeah, it's even the funniest jokes in the world are the true ones, man. And the best movies are the true stories. It really is like that, team. So just it is what it is, right? And I mean well. I really do mean well, okay, team. I love you all so damn much. You have no clue, man. Goodness gracious, man. But yeah, team. Any questions that you may have here, just go ahead and present them, and we will be all good in the hood. Yeah. Oh yeah. So let's see. I felt like my dad just walked into the room and he just burned one. What's the winning numbers to the lotto? Oh no. Oh my goodness, dude. That is so funny, bro. Let's see. I'm excited to practice waiting for the liquidity grabs. It's gonna happen, man. It's gonna happen. A lot of the times, guys, so many of these day trades. Oh, dude, I'll just be sitting there, man. I'll just be big time sitting there, waiting for it and waiting for it and waiting for it. But it's all good. It's all good. And then finally the play happens, and then like you forgot what you were even doing in the first place, man. You know what I mean? But it's all good. It's all good. Let's see. Yes. If you guys haven't, we're gonna do the market prep right after. Is there any indicators that can help you find potential liquidity grabs? The grabs themselves? No. To identify liquidity, yes, but you are coining something very interesting. That's I'm gonna work on that, dude. Thank you. That's a cool one. That's a very cool one. I think we have to use Polygon for that. But that's very unique thinking there, buddy. I love it. I love it, man. Let's see. I'd wait for $2 on XRP. Damn. Yeah, I mean, no one really noticed that was gonna happen, man. Just that was so ridiculous, bro. I mean, the whole market. I was telling you guys even this morning, guys. I mean, we're buying, and like, there's typically red. There's typically red on Mondays. Mondays are usually red. Patty, you are very welcome. Ripe is saying, take my portion of the idea profits to get nuggets for the CEO. No, dude, that's going to be directly inspired by you, buddy. When it comes to things like that, dude, I'm very, 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 very sensitive about applying credit to where it's deserved. So I'm very critical over those things, dude. Because if you have those great ideas as just, as a first learning how to trade, imagine what you're going to be able to come up with when you do know how to trade, dude. You're developed, dude, and I observe you, bro. You're developing your discretionary skills like so tightly. That I love it, dude. You're becoming a baller, sir. Let's see. I'm holding my XRP for a minute. I think something is off. I smell a shakeout. Yeah, that's what I thought it was too, man. I really did think it was. And now that we learned this right now, right? That was just a liquidity grab, man. Rap is going to be a badass trader. Dude, I think so, man. I think so. That guy's really mathematical. I love that. Oof. You know what I mean? Thanks. Let's see if the other idea works well once I get the data. Yeah, man. I think it probably is, man. I think it probably is, brother. Let's see. Institutional entries on XR. Yeah, man. Thanks. Let's see if, yep. I got you guys. I hear you guys. I hear you guys. All right. So, team, if we are in fact good to go here, let's see. And let's just go ahead and close up and get ourselves ready for the market prep. As I know that all of you are super duper excited for that one. Duper duper. Massively super. You know what I mean, Jelly Bean? Oh, yeah. Say again, dude. Oh, that's right. I told you no questions. Everyone feels ashamed now. Torito, I'll feel you. Yeah, I'll see you on the other side, man. Patty, come on, guys. It's not like that. That's why we're here. You know, we can't all be perfect, or no one, actually. No one is perfect. Jeez. I don't know anyone that's perfect in this, man. This is a tough area. This is a toofy. You got a futures question? Yeah, of course, brother. Send it over. And then everything will be chilling. All right, team. So I'm going to go ahead and stop the YouTube stream here.